AMD has wrapped up a volatile week on a calmer note, finishing Friday at $172.76, up 0.2% on the day. After everything that's unfolded in the past few sessions, earnings, analyst reactions, and some notable swings in the share price, it's worth stepping back to look at what happened, why the stock moved the way it did, and where things might be heading next. Let's start with Friday's action. The stock opened at $174, climbed to as high as $176.76 during the session, but eventually settled back down to close just under $173. That's a modest gain, and it's a sign that the market is starting to find some balance after the sharp post-earnings reaction earlier in the week. Volume was still relatively elevated, showing that traders are active, but there was less of the aggressive selling pressure we saw immediately after the report came out. To put this in perspective, we need to rewind to Tuesday. That's when AMD released its Q2 2025 earnings. On the top line, the numbers look strong. Revenue came in at $7.67 billion, up 32% year-over-year and comfortably ahead of Wall Street's expectations. Client segment revenue, PC and laptop chips, jumped 67% year-over-year, hitting $2.5 billion. Gaming revenue was even more impressive, climbing 73% to $1.1 billion. Those are eye-catching growth rates that confirm AMD is seeing real traction in its consumer and gaming businesses. But there was one segment that drew a more cautious reaction from investors: data center. Revenue there grew 14% to $3.2 billion. On paper, that's growth, but in the context of the AI boom, and compared to Nvidia's recent near 70% data center growth, it looked slower than the market had hoped. For a company whose AI story is now central to its valuation, that difference didn't go unnoticed. Adding to the complexity was the $800 million export-related charge tied to U.S. restrictions on AI chip sales to China. This charge pulled gross margin down to 43% for the quarter, compared to the 54% margin AMD would have posted without it. That headline margin drop was one of the big reasons the stock sold off in the aftermarket on Tuesday, sliding about 6% as traders digested the results. Now, here's the part that's important to keep in mind. None of this was a surprise to those following closely. The export hit had already been flagged in advance. The margin compression, while not ideal, was a direct result of that one-off charge, not a fundamental deterioration in AMD's cost structure or pricing power. And yet, the market reacted sharply. Why? In part, it's because expectations were sky-high going into the report. AMD's stock had already climbed more than 45% this year heading into earnings, including a 5% rally just on Monday. When a stock runs that hard, the bar for good enough gets very high. After that initial drop, the stock continued to drift lower midweek, but the underlying fundamentals didn't change. In fact, AMD's forward guidance was stronger than expected. For Q3, the company projected revenue between $8.40 and $9 billion, with a midpoint at $8.7 billion, above analyst estimates of around $8.32 billion. That guidance reflects confidence in the ongoing ramp of its MI300 series AI chips, and sets the stage for the upcoming MI350 and eventually MI400 platforms. That's why, even though the stock has had a choppy few days, the bullish case remains intact. If we zoom out, the core story is still one of a company expanding its product lineup, growing in multiple segments, and carving out a bigger role in the AI hardware market. Friday's session helped underline that point. While the broader tech sector showed resilience, helped by optimism that the Federal Reserve could move toward cutting rates later this year, AMD managed to hold steady and edge higher. That's a sign that the worst of the immediate earnings-related selling might be behind us. It also suggests that investors are starting to refocus on the bigger picture rather than just reacting to a single quarter's margin line. That bigger picture still includes some important moving parts. First, the data center growth rate is something the company will need to accelerate if it wants to close the gap with Nvidia. Management has pointed to increasing engagements with hyperscalers, and while there was no formal announcement of an AWS partnership this week, the tone from leadership was confident that customer interest is building. These kinds of deals take time, and the back half of the year will be critical for proving that AMD's AI chips are gaining real traction at scale. Second, the export situation with China remains unresolved. Management didn't give a concrete timeline for when shipments might resume, but any progress on securing licenses for its high-end AI chips would be a major catalyst. It's a variable that sits largely outside of AMD's control, but the company has signaled it's actively working on compliance and alternative markets. Third, the product roadmap is progressing on schedule. The MI350 is set to build on the MI300's capabilities, and the MI400 Alios platform, teased for next year, could be the real leap forward in terms of performance and efficiency. For long-term investors, those launches are key milestones, and the market will be watching closely for early adoption signs. Looking at the stock's technical setup, $170 has emerged as an important short-term support level. Holding above that level in the days after earnings is a positive sign. Resistance now sits around $176 to $178, the range where the stock peaked on Friday before pulling back. If AMD can break through that band with strong volume, it could set up a move back toward the $185 to $190 zone that was in play before earnings. Heading into the weekend, the sentiment around AMD feels more balanced than it did midweek. The initial shock from the earnings report has worn off, and the conversation is shifting back toward the company's long-term positioning in AI, gaming, and PCs. The stock is still up significantly year-to-date, the Q3 outlook is better than expected, and the product roadmap continues to advance. So what's the takeaway from this week? In short, earnings were good, not perfect. The stock sold off, in part because expectations were stretched. But the fundamentals that have driven AMD's rally this year remain largely in place. The consumer and gaming segments are strong, the AI product ramp is ongoing, and guidance suggests management sees more growth ahead. For investors, that combination of a short-term pullback and an intact long-term story can be an opportunity. It's the classic buy the dip setup, though with the usual caveat that execution on the AI side will be the key to sustaining momentum. As we look ahead to next week, watch for any follow-up analyst commentary. If we see price targets holding steady or even ticking higher despite the post-earnings volatility, that would reinforce the idea that the street still believes in the long-term thesis. Keep an eye on macro developments too. A dovish shift from the Fed could support the broader tech rally and help AMD regain its footing. The volatility we saw this week is a reminder that even great companies can have bumpy rides when expectations get ahead of reality. But it's also a reminder that one quarter doesn't define the trajectory of a company like AMD, especially when it's operating in markets as dynamic and high growth as AI, gaming, and high-performance computing. So while the headlines this week might focus on the post-earnings drop, the real story is that AMD is still growing, still innovating, and still positioning itself for the next wave of technology demand. For those who believe in that story, this week's dip might just be another chapter in a much bigger, much more compelling narrative.